Welcome to the Upshot for August the 10th. I'm Nadine Blaney. Well, today's reports have been headlined by the Commonwealth Bank. It posted strong results, although its share price not reacting very favorably. Other company results include Computershare, which actually was released after the bell yesterday. We've had an earnings upgrade coming through from Graincorp and Australian Clinical Labs in the smaller end of the market. Let's take a look at today's top three. Of course, starting with CBA, its $9.59 billion full-year cash profit topped estimates. Shareholders will see a higher than expected dividend of $2.10 per share, which takes the full-year payout to $3.85. Now, that cash profit is an 11% jump. You can thank home lending for that result, and it comes despite an 18-point drop in net interest margins, although the bank does say that it expects margins to increase as interest rates rise. Profits were also padded by a drop in expenses related to lower remediation costs and productivity benefits, which offset a rise in higher staffing costs. CEO Matt Common says Aussie businesses and households are in a good position, but that he expects consumer demand to continue to moderate as the cost of living rises. We've had some reaction from Moody's. While the bank's net interest margins, it says, fell to 1.9%, it believes rising interest rates should drive its net interest margins higher over the next 12 to 18 months. Still, Daniel Yu, Vice President, says this benefit will be partly offset by a normalization of credit costs and lower credit growth as Australia's housing market continues to slow. Computershare reported after the close, providing better than expected guidance after posting full-year revenue of $2.5 billion, up 12% on the full-year net profit of $228 million. Earnings per share are expected to increase by around 55% in FY23. However, Computershare is warning that inflationary pressures are impacting operating businesses and costs will continue to rise in FY23. Citi is weighing in, saying that current growth challenges exist in the underlying business. Graincorp, meantime, has lifted its annual profit forecast for a second time. It says supply chains are strong and crops are positive, and that is driving increased activity in the fourth quarter. It now expects net profit to come in between $365 and $400 million. And that is today's Upshot. Thanks for joining us. We'll see you tomorrow.